right, folks, welcome back here to the Diagnostic Trading Hour. I'm your host, Daryl Martin, right here on TFNN.com. Don't forget you can check us out streaming live inside the eSignal platform, live on TFNN.com on Tiger TV, and coming to you on your mobile phone at TFNN.mobi. Let's check out where the markets are right now. We got the S&P is just slightly positive, up 2 points. We got the Russell down 1.4. NASDAQ down just 5 points on the day. Don't forget, we have Google earnings coming out today right at 4 o'clock. And Amazon coming on out with it. And so we expect some big movements right there at the end of the day. We got Dow up 55 points. Looking on over at copper. Copper is currently down 1.3%. We got gold is down 2.5%, down 32 points. Some massive moves there on gold. We got silver is down 7. That is right, 7%, just crashing down to 16.82 now. It's a big move. So some great moves there. And you can trade these wild, massive moving instruments, of course, over on Nadex for that defined risk. We got natural gas is currently down 5.5%. Oil is down 1% on the day currently. Checking out our ag markets, we got corn and soybeans. Corn is down 1% on the day. We got soybeans down just a couple points. Going into the FX market, still got plenty of volatility with pound dollar down 89 pips. Pound yen is up 11. Pound franc up 174. Euro franc up 196. We got the dollar franc up 173. So just some awesome freaking moves on franc going on. I hope you've been taking advantage of that. I know I have. Looking on over at the euro dollar, it is up 11 pips. We got euro pound up 61. Dollar franc, I said up 173. USD is up 79 pips. Euro yen is up 104 pips. Aussie yen down 129 pips, with the Aussie getting hammered right now, down 164 pips against the dollar. Bonds are slightly negative, currently down about 30%. And they got the dollar index slightly positive, up about 1/3%. All right, that gets you caught up on our weekly market wrap. We got the Dow trading near some highs recently, as Goldman Sachs says they're leading the recent gains, and we got gold tumbling down towards that 200-day moving average, retracing on support. NYMEX crude oil futures falling down to $44 a barrel. Literally right now sitting at $44 a barrel. For the first time since 2000 and what is that? 9 since 2009. So been quite a long time since it's been on down there. U.S. dollar rising on the FOMC outlook. So basically the idea that they aren't raising them now. They're being patient on raising those interest rates, but they're not ruling it out. And saying still could be coming. I think Goldman put their outlook at September for an interest rate increase for now. Pound dollar moving on up to 1.5100 level there, and pulled back a little bit off, hitting that new level there, and strong support there. Natural gas getting nailed after smaller than forecasted stockpile drops on down. Let me bring that up. We'll show that to you. But I mean, it's just got like nailed today, and we had it on Thursday this week. And looking at it here, we get a Thursday each week, 10:30, down 113, down 94 from the forecast to 113, still negative. But, man, I mean, it just brought it way down. Stockpiles going down. Natural gas still dropping down with it, even with that being a little bit better than what it was. And just keep coming down. There's so much available. You go to the latest release, you can dive into that on natural gas. And they'll go into the numbers. Numbers represents a decline of 94. That's the number we see right there, minus 94. British thermal units there for the previous week. Stocks were higher than last year at this time. Okay, stocks were higher. See, even though it went down, the supply went down, stocks are higher than they were last year. And they're a little bit below where they are over the 5-year average. And it goes into more details. But that's usually what we look at. Is we look at what the number is, what the expectation was, and where they were last year, and where they were over the 5-year average. Those are the 3 numbers that are most important. Bottom line is you just got to trade it and go with it. But some massive moves right there. We got homeownership rate falling to a 20-year low. Let's see. We got that number. We got household spending. I'm trying to figure out. We got pending home sales. But recent report came out on Bloomberg, and that was talking about that. And basically going to the U.S. home ownership going down as people go in and they're renting and everything else a lot more. Well, to more than 2 decades in the fourth quarter, as many would-be buyers stood on the sidelines, giving the rental market a massive boost, making it very expensive to rent. So anyways, that's detailed in the housing reports there. And earnings reports, we got a lot of those coming up on earnings numbers. Let's walk through those for you real quick, okay? Make sure everybody's on the same page there. And see what we can get. All right, and let's see here. Going on over to the earnings announcements. So we got Amazon, we got, I want to say Visa, and we have obviously Google all coming on out. Let me bring those up on the screen. So Google coming out right there at 4 o'clock. Visa ought to be releasing its wire right at 4:05, impacting the Dow. And then going on over and checking out Amazon, also releasing at 4 o'clock in the NASDAQ, both Google and NASDAQ. So looking at that trade, saying what might be there, what might be available, we'll dive into that here in just a moment. At the NASDAQ pretty flat right now. That ought to make it pretty good for finding some strikes. Let's see, a couple reminders for you. Gold rolling on over today. So if you haven't rolled over your gold contracts, you should be doing that. The volume has moved on to the next train here into April. And just to show you the quotes, the volume, we got a volume 210,000 contracts in April now on gold. So gold COMEX moving on over there. Let's see, dollar index having some massive moves after the FOMC chart. And I may try to pull up a couple charts on here. See what we can get going on. It'll take just a few minutes. And I'll get that loaded up. We'll look at some of those FOMC trades that you could potentially look at. And a lot of ways to trade FOMC. But I'm just going to pull up simple 10-minute chart right now. Put that up there, and we'll add some other pieces as we go. Give me one moment while I'm opening. I got so many charts open right now. It's going to take a minute. What we are going to be doing is, like I said, we are going to be looking over here at the Google earnings trade. And maybe massive, may not be. We have no idea. So how can we trade it? Yesterday when I was going into and talking about it, I mentioned that what we could look at was going in and doing a dual layered strangle. Okay, so if we go over here and log into the scanner and get access to that, and we'll go down here and choose NASDAQ, for instance. And we go, okay, well, that straddles. Don't like straddles because the way that they tick. So I'm going to go over to the binary scanner. Again, I'm going to switch over to US Tech 100. And look at what we got available right now. Let's go ahead and expand these out. I need it to be after the expiration, but I don't need Fridays. So I can bring it down to 1 day. Can bring this up a little bit, try to drop some stuff off. There we go. Now we just have the 415s. See, if I go earlier, then I'll have stuff like 3 o'clock. I want it to be after the announcement comes out. Obviously, if I get closer, then I can narrow that down. These are basically the contracts. You can see they're pretty filled out. Surprised they haven't added more. Yesterday we had like a bazillion of them. With FOMC coming out today, with Google earnings, like somebody doesn't have a clue. They haven't put them on there yet. It's going to make the cheapest ones we can put on right now about the cheapest string we're going to get available at the moment. It's going to be about $23. Now, this if we hopped in right away. That makes it a little bit harder to hit our take profit like I like to hit on the two-layered strangle. And you're only talking a few bucks. You almost just want to go a little bit closer. Market right now is sitting at right around 41.24. Look at the exact price. right now, 41.2450. So right in the middle there at 41.24, 41.2450. We're talking a move up or down of about 40 points. Okay. And let's see here. So we have two choices on this, and we got to figure out sort of which one we would be most comfortable with. Let's see, most recent Google. Let's see what we got on this. I'm trying to pull up a few different things. Current 7-day implied movement, 4.7%, weekly, monthly. All right, let's see here. Just trying to see if we can find anything that will help us specifically on some historical movements. But with the current pricing, you're basically not going to pull off a dual layered strangle because we need more strikes. Yesterday, the chart I showed up here, let me see if I have that one. So right here, trying to find if I can find the best one. I had a dual layered one where I zoomed way out. There we go. All right, so this is the one I showed yesterday where I was looking at it going, okay, well, we have $14, we have $85. We get these cheaper ones maybe further out even than we have listed. Right now, we get about a 14 and 18, but that's pretty much, what we're talking about being as the widest one right now. I mean, there's one that's 11 and 12, but we don't have like $5, $6, and $7 ones. So will we? Well, that's the big thing is at this moment, we don't have them, but as we get closer to expiration, some of these are going to get cheaper and cheaper. Okay. So I'm going to honestly hold off on placing the trade right now. If I was just going to hop into it and just place one layer and one layer only, then I would probably be looking right here at the 12 and the 83 contracts and taking profit when either one is hit. I like the layer because I can go for the bigger profit. All right, y'all stay there. We'll be back right after this break. All right, folks, welcome back here to the Diagnostics Trading Hour. Usually we get about a 3% move in Google on this earnings release. So that's sort of what we're looking for. We got two different ways, like I said, we can do this. I prefer to go in and really I'd prefer to be like starting with these and ending with these right here. Going in and selling the 40.96 and buying the 41.56 really looks like the preferred play. The idea there is we're risking $30 to make about $30, which means you lose probably $15 on one side and make 15 on the other. Okay, so net we're really risking 30 to make 15 on the closer, higher probability trade there, and that's like the first layer. And so if I'm doing that contract, I'm hopping in, I'm hopping out, I'm buying the one there at 17, and I'm probably looking to get out somewhere between 43 and 53. On the one I'm selling at 84, I'm selling there at $84, looking to buy back somewhere between 53 and 43, sort of the opposite. Okay, and then using the profit from that to put on the other strangle that's wider. The problem is the other strangle that's wider right now cost about $21, $22. So make 15. I'm basically risking $6 overall left on that wider strangle. Still not a horrible trade or horrible play. The only iffy thing on this that we're trying to figure out really is we might still be able to pull off that ideal better strangle a little bit later as we get a little bit closer to expiration. Okay. If the market moves up too much, we won't be able to do it because basically their strangle won't be there. Okay. So just keep that in mind. Be aware of that. If the market moves up too much and there are not additional strikes made available, we won't be able to pull off the two-layered strangle. If it stays relatively flat and in this range leading up to it, to the announcement of the Google earnings at 4 o'clock, of Google's earnings at 4 o'clock, then we'll be able to, most likely premium will come down quite a bit and we'll be able to pull off a dual-layered strangle. So either you want to hop in now, like on the 40.96, 41.60, and then optionally you could do the dual-layered strangle now, maybe on half your position, and then see if it does tighten up, if the premiums do come down, maybe you can do another dual layered strangle at a cheaper price. But let's say it runs up by 10 points, you won't be able to pull off a strangle at all at a good price, so you don't miss out on the trade. So there's a couple ways to do it. One is just waiting and seeing if you can get that really cheap price closer to 4 o'clock. probably around 3:30 would be about the latest you want to be hopping in, or 2, hopping in now and grabbing at least the first layer, optionally doing the second layer. Okay, but be on that first layer, like take your profit just in case it's not a big move and it pulls on back on you. Okay, it's okay to go for break even on that first layer. Basically you're making $15 net after you lose on the other side, and that'll help cover the risk on the other wider strangle. Again, if you haven't ever traded these before, trade them in demo. If you want to get access to an account, hop on over to tfnn.com and click on the Nadex banner on the right side of the page. When you click on that, then go over here and click on Trading Demo Trading Platform. And fill in your username, your first name, your last name, phone number, email address. Check your email. You'll get a password where you can log in right away. You can demo trade this. You'll just pull them up the binaries. And of course, using the scanner makes life a lot easier to find those trades that you want to put on. I'm still going to watch a little bit. I'm looking to see here exactly what trade I'm going to put on, because I'm waiting to see what kind of oscillation we get in the market. And overall, it's been relatively flat. NASDAQ sort of pushing up right now, up about 8 points. May make it a bit difficult to put on this strangle. So I'm going to see just where it ends up over time here. Before I jump into it, but at least you have a couple different plans. You have plan 1, grab 1 layered strangle, go in, basically a $30 plus profit to net out at $15 or more overall on either side. Strategy 2, hop in and do the dual strangle now, okay? And then option 3 is wait to do either the single or dual strategy later until premiums have calmed down a little bit after a couple hours have passed. But with the risk of, if it moves too far, you won't be able to get a strangle on. All right, that is the summary of what to go back just for some review for some of you that are new. The whole idea here is Google is going to release its earnings at 4 o'clock. Google is a large part of the NASDAQ 100, the US Tech 100 there. You can't trade Google on binaries on Nadex. And so we want to take advantage of it. We don't know what direction it's going to go after earnings. Could fly up, could fly down. Right? So how can we best take advantage of that? The way that we can best take advantage of it is to do a strangle. So if it goes either direction, we make money as long as it goes far enough in either direction. I'll walk through exactly the steps on that for you again here when we get back. But at least you have the plan now. We'll go back and review some of the basics when we get back after this break. Alrighty, folks, we're going back here to the Diagnostic Trading Hour. And looking at this, we'll check it out, is get that demo trading account set up. We talked about that. You want to get that set up and going. We're going into the strangles. Talk about, once you got it set up, once you put it in, then we use a scanner to help us find the best binaries. Obviously, we're focusing on the US Tech 100 for Google earnings release since it's in the NASDAQ 100. And so we want to be aware of the trading those indices late in the day with those earnings coming out. And the way we can trade it is using a strangle. A strangle is where we buy a strike above the market, sell a strike below the market. And so I put, hey, if the market went up to 41.60, what would this one make? It'd make $33. If it went down to 40.92, what would this one make? It'd make $40 profit. So 34 on that one, 40 on that one. If we're risking about 15 to 20 on each side, then our net result is going to be, we're basically going to make about a $15 profit on the trade, as long as either one of those prices is hit, up or down. Okay. Remember, one side will probably lose unless Google flies up and NASDAQ flies up, and it flies back down and NASDAQ flies down. So unless both of those happen, and I do leave the other side on, I don't take it off. It's at max loss. It can't lose anymore. It doesn't matter how far it goes against me. I don't have to exit the trade. And so I let it play itself out. But right there, once it flies up, take that profit. If it flies back down, great. Maybe you'll get it on both sides. That has happened a couple times. Not very often, but it does happen now and then. Again, we use a strangle because we have no idea what direction the market's going to go. We don't use straddles. Straddles are, strangle is basically like sort of strangling, like around the neck, right? So putting the hands around the neck, strangling. Straddle is like sitting right on the horse, okay? The exact same strike. So you have the exact same floor on your buy, and you have the exact same ceiling on your sell, and that's using the spreads. The spreads only move at $1 tick. Not really a big fan of using them for this trade. And because the big money on this trade is not simply in the big movement. The big money on the trade is actually in the ideally the secondary binaries, where we can go in and put these on. So let's look at this. Let's go in and put it in a, let me reset everything. Look at a 1-to-1. We're going to look just at the daily contracts. So make it give me 120 minutes. And we'll put a max risk in here just of $100. Probably can lower it from that. Let's see if there is one even. There may not even be a contract to do it on right now on the spreads. I'm trying to find it's basically the 415s. Well, that one could work. Okay. And then we go down here to the 415s on the sell side. Who knows? Maybe we'll find one that we like. Right there. 41.20 ceiling, 41.20 floor. Market is about $18 risk on one side, $3 risk on the other. Risk is pretty low. Now, here's the thing you got to understand is you're going to make $1 a point move. So when we were looking over at the binary scanner earlier, maybe where I can flip back and forth here. And we were on our binary scanner. Bring this back out to a couple hours and just that one. And then what we had selected was we were looking at, this contract down here, this one right here, and actually let's move it up a little bit on us now. And we had 41.60 on the high side, and we had 40.84 on the low side, or 40.88. 40.88 was our low side price. There we go for simulation. So looking at all these trades, put all the different pieces, like I said, together on the trade. Then going in, looking at this, how much would we make if it moved up to? So if we bought 41.40 and it went up to what price? We said 41.60. So we bought at 41.40, went up to 41.60. We'd make $20. Lose $3 on this. We'd make about 17. About the same trade. We make, over here about 28 bucks. We lose about 10. Actually, we make 18. Okay. If we go down here, if it went down to 40.88, we sold at 41.18. Then we'd make $30. We'd lose 20 bucks. We basically make about $10 net. Well, here, if we went and sold this for 90, let's say we lost 25, we made 45, we'd make 20. We'd actually make more money in the same move by using the binaries than we would using the spreads. So in this case, and that's not always the case, but in this case, just the way that the premium is, accounting for earnings, all that stuff built in, that's why I prefer the binaries over the spreads. That's why I do a strangle over a straddle. It can move really big. That's why I don't do iron condors on the trade, because we can have very, very large moves. And let's see here. That chart's not opened up. So, all right. Let's see. Butterflies, of course, when we do a range-bound strategy, it's basically where we buy the lower and sell the upper, but I expect it to move and sometimes move big and stay far up. Like a lot of times Google earnings don't just fly up and then come back. A lot of times they just go, 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 go. And then they'll get to a certain point, and then they usually just stall right there. So that's sort of what we're hoping for and counting on. I will do butterflies like on 20-minute contracts when volume is below expectations. For butterflies on those, where I'll buy the lower binary and sell the upper binary, or I'll do strangles on 20-minute binaries, where I'll buy the upper and sell the lower if volume is above expectations. But normally I don't do strangles. This is actually a rare case for strangles outside of the 20-minute binary contracts. It's literally a play I reserve just for the Google earnings release each quarter. I also don't trade directionally. It's too fast. The pricing often is not good. The implied volatility is built in. Implied volatility is expected movement. It makes it more expensive. Okay. It pushes the price towards the center, towards 50. Okay. And so now one thing that's always fun on this trade is, and I've had this happen a number of times, is after I enter it, especially getting closer to the announcement where they launch, is I'll actually see both sides often will be profitable. They won't be profitable by the full profit that I want, but you'll see the implied volatility get so big going into that earnings release that sometimes I'll literally see both sides, the bought one and the sold one, both go up in value enough where both sides actually are making money before the move has even happened. So, which is pretty sweet. Let's see here. What else do we got on this? Just some other things. All right. So that, I mean, that really is about all I can teach you about the strangle. I mean, that's really all there is to it. All that's going on, and just got in and out of trade there. But anyway, so that's pretty much what there is to that specific trade. Trying to think if there's anything else I can dive into on it for you, but let's see. I don't believe so. Okay, so that's pretty much what we got right there. All right. Let's see. Other piece going into the news trading plan. I want to make sure I got all those pieces wrapped up for you. So I'll bring that up on my other screen here. And like I said, we already covered earnings for today. You got that down. Tomorrow, some earnings that are coming out. Chevron will be releasing its earnings there. They ought to come out in the morning around 8:30. And that is heavily weighted in the Dow. Let's see, New Zealand has some building consensus coming out at 4:45 for you New Zealand and Aussie traders there. The yen has a slew of reports coming out at 6:30. Household spending, Tokyo core CPI, national core CPI, and unemployment rate. And they have some more coming out at 6:50 with preliminary industrial production coming out. So just be aware if you're trading the yen that those are being released. Aussie dollar has PPI private sector credit news being released at 7:30. Usually not a big mover. A lot of times you can get a $25 if you pull off a $25 iron condor, if there is one, that's about all the movement you expect. And so that is a trade to check out as a potential trade setup. That'd be entering the trade at 7 with a 9 o'clock expiration if there is one for $25. If not, at least you know the expectation of movement on that during that time from 7 to 9 is about 25 pips. Pound has a variety of reports coming out. They got net lending, M4 money supply, and mortgage approvals. Usually the pound dollar is pretty flat when these releases are released. It usually stays around a 30 pip range. Use a little caution on this, a little longer iron condor right now. And also we're having just a lot more volatility in the FX markets than normal. So $30 would be definitely the minimum you'd want. Entering from 11 to 7. Make sure you're setting a stop loss in there. And hopping on over to the euro, various reports news coming out at 5 a.m. CPI, core CPI, unemployment rate, and Italian preliminary CPI. Maybe a little bit more sensitive to that employment rate right now with everything that's going on with the euro. But I mean, they're doing QE, and bringing that thing down to par with the dollar. Let's wait for it to happen. Anyways, usually about a 35 pip move between 11 and 7 when these reports do come out. Again, a little more volatility than normal right now in the market, so use some caution on that iron condor. Going in to tomorrow, we have the Canadian GDP coming on out. Usually not a big mover itself. Usually 25 pips or less, 8 a.m. to 10 a.m. Again, I'm going to repeat it again and again. With all iron condors this week, just use some caution. Don't go maybe as big as normal, or just make sure you're sort of watching them because there's been more volatility than normal lately on some of these pairs. The dollar CAD has not been as bad, but still, just be aware of that. Other numbers that are coming out just to be aware of, we got the German retail sales and import prices coming out that'll impact the euro at 2. We got at 245. We got French consumer spending coming out. The franc with economic barometer. That'll probably cause some volatility with the Swiss franc moving so much lately. That'll come out at 3 a.m., something I haven't paid just an enormous amount of attention to. But right now, all franc announcements are a little bit higher on my calendar list, right? So 3 a.m., KOF economic barometer being released. We got the Euro Spanish CPI, flash CPI GDP coming out at 3 a.m., impacting the euro. Also tomorrow morning, some other releases in addition to the CAD GDP. We'll have a U.S. Chicago PMI coming out at 9:45. We're going to have the U.S. Revised Consumer Sentiment Report. Again, it's revised sentiment and inflation expectations at 9:55. Usually not a massive market mover, but we can see an impact for about 10 minutes, and then it's over. Then, of course, we have our consistent weekly weather, crop bulletin reports, all that stuff come out after market close. China is going to have some manufacturing PMI, non-manufacturing PMI reports come out at 8 p.m. on Saturday. So that can affect your Aussie yen positions heavily over the weekend. Could also affect US, just depending upon what exactly comes out. Let's see, earnings for next week. Let's see here. Let me pull those up for you. And 1 second. Let's see, earnings for next week. What we got? We got the Dow Jones, ExxonMobil being released 8:55 a.m. on the 2nd, right there in the morning. We got Walt Disney and Gilead both coming on out. Those will be coming out at 4 o'clock on Tuesday, and Gilead coming out at 4:05 on Tuesday. Merck will be coming on out in the Dow Jones. They're coming out at 6:30 on Wednesday. And then we'll have Vodafone BOD coming out there, and the NASDAQ coming out, not confirmed yet, so we'll have to finalize that one. And let me see if that's, let me go ahead and dive into that one real quick. I want to see if they've confirmed it or not yet. So not yet confirmed. I'll let you know next week, but so far its expectation is for the 5th. And I'll update you when we get a little bit closer to it. On the confirmation of that. Let's see, other news coming out next week on Monday that you want to be aware of. Let's see here. Monday we got manufacturing PMI report, ISM manufacturing PMI, building approvals and trade balance coming out that night. And let me see if I can find, let's see, last time we had manufacturing PMI was back there on the 2nd. So let me see if I can find a good release. That was not the 2nd. That's weird. Hold on here. January 2nd. Go to December here. Okay. That's construction PMI. And manufacturing PMI. Go back. I'm trying to find the new stats for you on this trade to see you'll have them. Since next one won't be till Tuesday there. Let's see, 4:30 a.m. and November 2nd. Okay, there we go. Usually a 30 pip profit on the manufacturing PMI. Okay. So 430 pound manufacturing PMI come out on Monday morning. Spanish unemployment change will come out on Monday as well. And then we have the Aussie cash rate. We'll talk about that when we get back. Aussie cash rate RBA statement coming out at 10:30 on Monday night. I'm going to be very aware of that. Stay right there. We'll be back right after this break. All right, folks. Welcome back here to the Diagnostic Trading Hour. And we're just getting you caught up on all the news rates. The big one I want to make sure that you did get in your book there for end of the hour here is make sure that you have that Australia is releasing its interest rate on Monday evening at 10:30, okay? So again, it'll be releasing its interest rate on Monday at 10:30. They'll be doing a rate statement as well. So when that statement comes out, when the interest rate comes out for their cash rate, it's basically their Fed FOMC announcement, okay? So obviously that can cause a lot of volatility, and you want to be very aware of it whenever you're trading so you don't get caught off guard on it. And let's see, I'm trying to catch the last one for you here. Usually that is a pretty flat event. Usually it's about 35 pips. They haven't really been doing a lot with their interest rate. I'm just cautious on all the interest rate announcements right now, but usually they have not been doing it, and it stays within a 35 pip range. So between 6 p.m. and 11 p.m., with the rate coming out at 10:30, if you can get a 35 pip or more profit on an iron condor, that is a trade that you can consider. Like I said, usually we don't see more than that kind of movement on the Aussie dollar during that time when the interest rate announcement is going to come out, because it'll be very flat before it comes out. It's as of expectations, then not a whole lot changes. Okay. Let's see here. Trying to go through anything else that you need to definitely have on your calendar. But those are really the main things. Let's see. We got ISM. Let's see if we have any stats for ISM. Let's see here. Pulling it up. And ISM. Yeah, we do have stats on it. So ISM comes out right there at 10 a.m. So we're going to be looking for a 9 a.m. to 11 a.m. You usually get a 12 or a 25 pip move or less. So we're looking for a $25 or more minimum profit on an entry at 9 a.m. for a 11 a.m. expiration on the euro dollar using an iron condor. That's where we're buying the upper spread buying the lower spread and selling the upper spread. So we're doing premium collection, expecting it to stay in between the price we buy at on the lower spread and in between the price we sell at on the upper spread. The more in between that it is, the more profit we make. We actually can make a little bit, even if it goes a little bit against us outside of that range. If the market were to fly higher or lower than where we got in, as long as it doesn't fly higher or lower than where we got in on the profit on the other side. So if we make 15 bucks on one side, it could move 15 bucks above the price we sold the upper one at, and we'd still be break even. Anything less than 15 pips, we'd be profitable $1 a pip all the way down to the max profit up to 25 pips on the trade. That's how an iron condor works. Anyways, but that lays out really all your news for this week and for the first part of next week. I want to see if there's anything else that's real big on Tuesday you need to be aware of before the show comes up. Let's see, next Tuesday, we are going to have a manufacturing PMI. That's also usually a 35 pip mover on the pound dollar. And let's see, we got that one covered. Okay, and then Tuesday, February 3rd, we have construction PMI. That's usually about a 35 to 40 pip move on pound dollar. And then we'll have New Zealand employment change later in the day and their unemployment rate with the New Zealand governor speaking afterwards at 6 o'clock. So not a whole lot, but a couple potential iron condors, the main one being construction PMI for about 40 pips on 4:30 on Tuesday. And that will wrap up the news report for you for the remainder of the week and the report of next week until the Diagnostics trading hour starts up again next Tuesday. Right now, we got the S&Ps moving on up 14 points. NASDAQ up 22 now. Dow up 154 and Russell up 11. Markets moving into positive territory. All right, I hope y'all have a great and profitable trading day, and I will see y'all tomorrow here on the Bull Bear Binary Hour.